Good morning. Here we go. We unmuted now. Boy, we had a bad beat last night with the Detroit Tigers. God, I listened to it on the local station. Well, around here, a bunch of Astros fans. Houston's down the road. Detroit, we out hit the Astros. We just left too many men on base. We lost 5-4 and got jumped out of a 3-1 odds matchup. But hey, that's how it goes. If I'd really been smart, I'd suggested taking the points on Detroit, which would have been really a safer bet. But to make this kind of not go back on it, but kind of reinforce my call about last night, I'm going to actually take the points on the Tigers again tonight. The charts again set up to where I think the Tigers got a shot. And once I really don't think the Astros are going to have the rest of the season. I think they're going to kind of taper off and getting hot. I think they're going to lose the they're going to lose being in contention for home field advantage throughout the playoffs. And they won't make the World Series. And hey, I know I got one call right for, and Wager Talk TV on YouTube can tell you that, because I want to say probably back in July, or no, maybe even late June, I commented on the fact that Alex Cora's chart wasn't too didn't look indicative of another World Series run, and they wouldn't make the playoffs. And look where we at now. I don't know, they're like 10 games out of first. So hey, it is what it is. They got I screened the games yesterday from MLB, and man, they have a bunch of I've picked out like 8 games but I'm not gonna be able to get through those. So I'll just go a little more on tap. I did get through the. I like the Brewers today against the Rangers in that day game. I would take the Brewers. They're not a big what you call it, a big favorite. It's actually kind of I want to say really a coin flip, but I like the Brewers today. But I really want to turn your attention now to financial markets. I know I haven't been doing what I've said I've been doing. The last time I did a video on financial markets, I kind of gave you a little rundown of what I thought would be happening with the dollar or whatnot. And I just actually put a call out on TradingView to buy the yen against buy the dollar against the yen. And I'll go ahead and share this screen. Here we go. This is what I'm seeing right here. We have from the end of June, we had an ABC pattern that went to this big rip down to 105. And so we're looking at the end of this June pattern, this swing right here. This presents a bunch of opportunities from a harmonic trader's standpoint. You see, we got an ABC. You can measure this from one side, one rip up right here, which is 1618, and you can go for a target back at the 618. That's a reverse ABC back at 1077. Or we can look at it like this as a bearish 50. You see, we got 1, 2, 3. There's the rip down to 2. Measured here from here is 2. And then we look for a sale at 1072. Okay, well, I just noticed we just got this bearish crab pattern set. And you see, we got it. XD measured at 1.618 would be at the same area of confluence as this reverse ABCD pattern, which is 38% of this whole drop since April. So I'm looking for the dollar yen. That this, you know, you set your stop loss right here on, you know, if it goes under C, your pattern is basically null. It's not good anymore. So I'm in this trade right now, and I'm still in my euro dollar shorts and my GBP, my pound shorts. But this is the one thing I want. This is the potential. You're looking at 200 pips, around 2% gain right here. I'm sorry, I'm not measuring that right. Let's try that again. I opened up at around 106.3. It's still 150 pips what I'm targeting right here. So yeah, but the big thing I've been looking at bonds. This is the story. I made this chart a long time ago, and I nailed this this Gartley right here, which in 2018, I mean, it smacked it to the T. So this whole year, you know, we ran up on bonds since fucking, what's his name, reneged Powell and the Fed and slap bitch. But anyway, what we're seeing here on the monthly chart, this is pretty big. Since this run up in bonds, look at this. We're about to be overbought again in bonds. We got 133 or 132. We get up in this range right here, this thing's going to be looking to turn. And I'm not thinking this is going to be good for the dollar. If bonds sell off, I don't know. We might have a problem, Houston and the dollar. Trump might get his wish. And look, if you zoom out in a lower time frame, this is still the same. This is the run up this year, and if you look at it from a smaller time frame, we're actually right now in the PRZ, which is the price sensitive zone of a bearish cipher. And you see in 131, I mean, it's struggling. So you got a potential rip for bonds to come all the way back down to 120. That would devastate financial markets, in my opinion. Oh my God, that would be bad. So yeah, this is really, really something to watch before stocks. If this thing gets under 128, or this gap right here, you see this little gap? It's not a big one, but look, you go under 126, it's gonna be hell. I'm looking for these two gaps right here to act as support, and if this goes under 126, yeah, we're gonna have a problem. That might be the start of the trigger of the central bank freak out, and they gonna put yields down to the floor worldwide. But if the Fed loses control right here, I mean, it's I don't know if bonds don't keep going up. Sorry, people. You better go revise your 401k. That's all I'm gonna say. But anyway, yeah, we still have the wand right here doing what it's doing, coiling up since it broke 7. I still expect one more drive up to 719, 715 at least. But yeah, it's looking more and more as time goes by that Trump might get his wish. Here's the dollar again. As you can see, this is the weekly chart. Sorry. This is a very important trend line. We're just waiting on time for this. But let's see. Let's go a little bigger. Yeah, we still haven't finished this bearish this pattern right here. And this might coincide with that bond top that I'm talking about. Because you see, we get this one little more rip up for the dollar at around 99.13. I say 99.5 just to keep it simple. Now, if this thing keeps going up, hey, that's how much world out. This guy I follow on LinkedIn, he has a little hashtag. I like it. It's called World Out of Whack. And bonds, you know, conventional wisdom, when bond prices go up, the dollar's supposed to go down. Well, not the world we live in today, people. You know, not the world we live in today. So, really nothing changed in financial markets. Sorry, I had to check my email right quick. Not changed in financial markets, but I just wanted to alert you that this is a really big deal right here. I hadn't really looked at bonds in a while, and it's really exhausted. I mean, the only way I could see bonds going high, we're gonna have to shoot through this, and I don't see that happening. We haven't done that since 2000. Before 2007, bonds haven't, and we're talking about the run up from 2001, bonds haven't been overbought like that. So this little rip, this whole 2009, ever since those assholes reneged, you see, I tell everybody this, and I keep saying on LinkedIn, and I'll say it again, and Trump, you are wrong. You backed your own Fed up into a corner, bro, because you got your little ripping bonds. You know, your little stock market didn't correct in 2019 because of this bond rip since those boys reneged in December. But I'm telling you, your little short-term juice is about to bite you in your ass. And I don't know, you can call yourself the king of debt or whatever. Well, we're about to find out, my brother. Anyway, I also wanted to look at oil before we let y'all go, because I'll tell you one thing, this is the only reason why recession didn't hit the home, like the real economy yet, is because oil has been stable thanks to the independence of American oil. Thank you. But yeah, nobody talks about the spread on Brent and WTI, which is probably close to $10 now. It's fucking crazy. That's on, you know, but that's the new normal. But oil, we see right here. This is WTI, by the way. I've been looking at this pattern right here, man, from this drop in May 2015. We've retraced 141% of this. Now look, if we don't get above $61, which I really think oil is going to be stable through the end of the year, if these fucking bond prices don't go crazy, which is the whole bonds and oil. That's what the name of the game. Stocks takes cues from this. But if we start squeezing below $50 a barrel, and this trend line breaks right here, we're looking at another $41 a barrel. Now, once it gets to that range, then I would think that's a buy signal. But as you can see, look at all this. This is all range trading. You see, you look left from 2016 all the way to 2017. You got your range. This is what this price is fixing to do right here. So thank you, America, and thank you, oil independence. We are not subject to those assholes overseas and OPEC anymore. Because I really already know if gas prices in America go to $3 a gallon right now, everything's gonna break. It's gonna break. So I just wanted to say hi. Sorry about the bad beat yesterday, but look, a 3-to-1 shot, 5-4. Fucking can't ask any better. I mean, You'd ask any professional sports bettor if you'd have took the Tigers yesterday, and they'll laugh in your fucking face. So it is what it is. I came close to getting you 3 times your money, but close don't count in these games, right? So anyway, I hope y'all have a good day. I got to get ready for work and get this shit uploaded. But y'all take care and make somebody's day today and smile and be nice. Peace.